my name is Jake Szulinski, and this is Investing Sense. On Investing Sense, we talk about important financial topics for our local community in hopes that we can educate them a little bit better. Today, we're going to be talking about long-term care, and with me, I have Jackie Kennedy Sisson. Jackie Kennedy Sisson is the personal finance manager for Surrey Services for seniors. She helps clients to manage bills and other financial issues, including developing a budget, tracking income, expenses, paying those bills, and helping with billing questions, as well as organizing tax information, assisting with financial matters after the loss of a loved one, and reviewing insurance policies explaining coverage, managing those insurance claims. And the client retains control of all these financial matters while Jackie takes care of organizing and following up. Jackie, thank you for taking the time today. We appreciate you being with us.
Thank you for having me, Jake.
How long have you been with Surrey Services?
12 years.
12 years. Has it
Yes.
been good for you?
It has been great.
Great.
I love my job. It's been wonderful working with seniors in the community, and I really enjoy helping them with their finances. I visit them in their homes.
That's great.
So I've met a lot of people and helped a lot of people.
How many locations does Surrey have at this point?
Well, we are in Devon, Broomall, Media, Havertown, and now in East Goshen.
Wow. So good. It's great. Everything I've been reading and the development through all the different locations has looked promising. So
Yes, we are definitely growing.
I'm glad it's going well. Well, again, thank you for taking the time. We appreciate it. And as I said, today we're going to be talking about long-term care.
Yes.
So I guess we can start off by asking, what is a simple definition of long-term care?
It's really care for activities of daily living. Maybe you need help with bathing or dressing, or maybe it's just as simple, as needing some help with cleaning, cooking, all of that. It sort of encompasses that whole range, including medical care, such as, managing meds and other aspects of your medical situation.
Okay, so I know there's a lot of information out there about long-term care, but if we can kind of take it maybe step by step and go over a few things and hopefully be able to educate some people out there that maybe have some of the same questions, what types of long-term care are actually out there?
Well, there's some in-home, and there are also some in a facility. So people need to think about whether they want to stay in their homes, age in place, or whether they prefer to move. And if you need a high level of care, then there is skilled nursing, which is 24-hour nursing care. Maybe you don't need that as much care, then you would consider a personal care facility. There you would have help with your medications, meal preparation, cleaning, so forth. Sure. And then if you need help with, maybe getting a shower, getting dressed, so forth. And some people prefer to age in place. So there's also, the in-home care agency, home care, which is what Surrey does.
Okay. Yeah, I was going to say, most of my clients, I think that I talk to, if you talk to them before something happens, most of them say they want to stay in their own home. Now, I think you alluded to it a little bit. Now, if that's actually feasible is a whole other question. But
of course.
I think if you ask somebody, I would assume they'd say, yeah, absolutely, I want to try to stay in my home. Do you get that same?
Yes,
okay.
Absolutely. We find at Surrey people want to stay in their homes. They've been there a long time. They're comfortable there. It's a lot of what Surrey is about, is helping you in your home and to stay in your home and, stay engaged in life. And it's basically, we have a home care. We are a home care agency as well as a senior center. We're an interesting organization.
Yeah, it sounds like you have a lot of options.
Yes.
That's good.
Yes, and you would have a home care aide come out to your home and provide care. Is how it works with Surrey.
So a lot of the questions I get as well from some of my clients are about the cost, because if you go out on the internet or wherever and you read about long-term care, there's a lot of discussion around how expensive it is. So how expensive are the different options for long-term care?
Well, it depends on the level of care that's needed, and of course there's a lot of financial planning that goes into this, as you know, working from your clients. If you need a high level of care, such as a skilled nursing facility, then it's about $10,000 to $11,000 a year in this area. And
$10,000 to $11,000
I'm sorry, not a year,
a
month.
Right, yes.
$10,000 to $11,000 per month.
Wow.
And all
okay.
the figures I'm going to quote are based on the Philadelphia area because it does vary by geographic region.
I'm sure, yeah.
And then personal care unit, if you move to a personal care facility, that's around $6,000 per month.
Okay.
And then home care is about $25 an hour.
Okay.
And just to give an example, if you need, say, 6 hours a day of personal care every day, that would be about $4,500 a month.
So it's pretty expensive.
It is expensive,
yeah.
yes.
Okay.
Yes.
So what are the financial considerations, I guess, that you have to make in either buying a policy up front or trying to fund it on your own at some point when something happens? What kind of advice do you talk to some of your folks over at the senior center about?
Well, first of all, I think there's sort of a misunderstanding that Medicare will pay for long-term care. A lot of people believe that since Medicare pays for medical care, they'll pay for long-term care.
Right.
They will pay for rehab care. So if you're in the hospital for 3 days at least, and you go to a rehab facility because you're not ready to go home, maybe you need some physical therapy, some occupational therapy, then Medicare will pay for that. As long as you're rehabbing, you're getting better. Once you plateau, if you're not going to get better and you need long-term care, Medicare does not pay for that. And
You
that's
have to
what
leave the rehab facility at some point then.
you do
so yeah,
leave, yes, and they will, have you leave once
Sure.
you're not making any progress or
Right.
you're well enough to go home, because people get completely better and go home as well.
Absolutely.
And then you have to look at the options to fund it.
Okay.
There is Medicaid. Some people qualify for Medicaid. You have to be lower income, and you have to have assets no more than about $2,000.
Okay. So you have to
for
almost
Medicaid.
spend everything down to be able to qualify for that.
You do spend down. There's also a 5-year look back with Medicaid, where if you have given money away in the last 5 years, then you have issues with qualifying. Some people say, well, I'll give my money away and then I
Absolutely.
can qualify. But they're
the
wise to that.
Yeah,
Yes.
the little loophole. I'm sure that
Yes.
they've seen that before and now
Exactly.
closed it. So can you go over some of the basics then of what a long-term care policy actually looks like?
Okay, well, I just want, with
Sure.
the paying for long-term care,
Yes.
people also pay out of pocket through their
Okay.
income, through their assets by spending down, planning
Right.
ahead, sort of self-insuring, and, building up a nest egg so they can afford it.
Right, but as you
And then, of course,
said
there's
before,
long-term
that
care
could be
policies.
anywhere between $50 to
It's
$100,000 per year, depending
It
on the
can
level
be.
of care. So that's, yeah.
Yeah, and it's something to plan for, because
Right.
according to Motley Fool, 70% of current 65-year-olds will need some form of long-term care. So it's definitely part of the whole financial
Absolutely.
planning aspects.
I agree. So if somebody does decide to not self-fund and they want to go out and buy a policy, can you tell me a couple of the basics of a long-term care policy that you discuss with your clientele?
Yes, many of my clients have long-term policies.
Okay.
Because I am working with people who are in their 70s, 80s, even 90s, and we're reviewing policies, figuring out what they have, how to make a claim, so forth. That's been my experience with these policies. And they basically will cover long-term care, just like the types of care I discussed, and they will reimburse the policyholder based on the terms of the policy.
Okay.
We can talk a little bit about that. And they all vary, as you know, in terms of how long you have to wait to receive benefits, how much you can pay per day, they'll reimburse you for, how long the benefits will last, etc.
Okay, so they all have different options on there. So
They are.
Yeah.
You have to read each policy.
absolutely. So when someone's quote unquote shopping for a policy or looking at their options and they've decided, okay, I think getting a policy is the right thing, what's that next step? What should they be on the lookout for? What are their terms or definitions should they know when they're shopping that policy?
Well, it's definitely important to read the policy. And that goes for people who are shopping for policies, but also people who buy them and they tend to let them gather dust. They put them in a drawer, take them out,
Sure.
read them through, see what's going on. I do that a lot with people. I help them interpret their policies.
That's great.
So one of the terms that people do not pay enough attention to, that I find, is the waiting or elimination period.
Okay.
This is how long you need to wait before the policy will reimburse.
Okay.
Sort of like a deductible. It is a number of days. It can be 30, 60, 90, 180.
Okay.
Really varies. And it not only do you need to qualify for the benefits, you also need to have paid for the benefits out of pocket for that number of days.
Okay, so
let's-
before the
yeah.
benefits of the policy kick in, whatever that time period is called that waiting period. So
Absolutely.
they're not going to pay any of the benefits actually out of the policy until you've completed that time period, is what you're saying.
Exactly.
Okay.
Exactly. And how they calculate that time period can vary a little bit between policies.
Okay.
It's actual days that you are getting service. So if you have a home care aide in 3 days a week, that's 3 days of service.
Okay.
Some of the older, more liberal policies will let you calculate that 3 days as a full week.
Okay.
And then you get 7 days.
So it's very important to look over the details.
And that's important to look at those, yes,
Okay.
before you even plan on getting care. Look at the
Okay.
policy and think about how you can get through that waiting period as quickly as possible.
Okay. So other than the waiting period, anything else that would, you definitely want to stick? I know, again, there's a lot of options with a lot of different policies. So again, read the full policy, but any other that kind of come to the top of your mind?
Yes.
Okay.
Yes. The daily benefit
Okay.
maximum. This is how much the policy will pay per day.
Okay.
And it may cover your care. It may not cover all of your care. You may have to pay out of pocket some. I have had people with benefits ranging from $100 to $350 a day.
Okay.
So it does range a lot.
So you
But
want to,
that's
again...
how much you get per day.
Absolutely.
Yes.
So in the beginning you said you
Think
need
about
to
it.
plan for it. You got to
You
think
do.
about how much care you need and maybe what policy
Absolutely.
would make sense and what dollar amount you would actually need.
Yes.
Do you see most
And those-
people trying to fully cover or partially cover for care? So like you said, it may not cover their full benefit and they have to pay some out of pocket. What do you usually see?
I think it varies, and I think it's changed over the years as the policies have become more expensive. I find that some of the older policies will almost fully pay. I think the trend has been to buy a policy for some of your expense, self-finance for some of your expense. I mean, this is pretty much
Right.
a lot of what you also work
Yeah.
with people on.
Absolutely.
You don't have to insure for everything, but
Absolutely.
a partial,
Yeah.
partial insure and partial private pay and so forth.
Yeah, absolutely. I do see a lot of that. That's what I'm seeing as well, as a lot of partial, especially because of the expense of it, because of how much it
exactly.
costs to get the benefit, and a lot of people don't want to necessarily pay for the full benefit. We talked about also, so the waiting period as well as how much you're going to get per day. How about how long the benefits actually last? So I'm assuming that differs as well, you see, with a lot of the policies.
It does.
Yeah.
It does. I've typically seen 3 or 4 years.
Okay.
The way they are calculated is sort of based on a pool of money.
Okay.
So let's say you have $200 a day.
Okay.
Okay, and you have a 3-year benefit period. The company views that as a pool of money that you can use for care.
Okay.
So if you calculate that out, it would come out to about $219,000, like 3 years at $200 times 365 days.
Okay.
That's your pool of money.
Okay.
So it doesn't necessarily stop at 3 years. Like you made a claim and 3 years later you're done. The way the policies work that I have worked with our Surrey people is that you have that pool of money, and maybe it lasts longer than 3 years if
Okay.
you don't use it every day or you don't max it out every day.
Sure. And again, I'm
It's
sure.
important to know.
Absolutely. And again, I know that's going to differ with different policies on how they actually allow you to use that
Absolutely.
pool of money during what time
And
period.
it changes. It's changed over the years. We can
Absolutely.
talk about that too.
So, is there a best time that you see to actually buy a policy or shop for a policy? Is there, whether, a certain person, obviously, I'm assuming, that I've seen with my clients, when something already happens, it's too late, and then they want the policy. But any time before that, is there a specific time period that you usually recommend going out and shopping for a policy?
In your 50s, early
Okay.
60s are the best times to shop.
Okay.
I also receive a number of calls, similar to you, that people in their late 70s, early 80s, I need a long-term care policy. Well, at that point, it's a bit late. I mean, I have had people get quotes.
Sure.
They're very high. They are not really financially feasible. Or, of course, they get turned down for medical reasons.
Right. Yeah,
Because
absolutely.
they do underwrite. They do make choices as to who to insure.
Yeah, so let's just take that for a second as well. So you said they underwrite. So can you explain that a little bit more to make sure that everybody understands what that means?
It's that the insurance company can determine who they want to insure,
Okay.
whether you're a good risk or not.
Okay.
And, they can give you insurance if they feel that you're a good risk, and if
Okay.
not, then they can either price it way up or they can say, no, we're going to turn you down.
So ultimately, they're going to look at your medical history and probably
They will.
make that determination. So you're going to have
Absolutely.
to fill out some type of form and probably have some type of medical medical screening for them
Yes.
before they make the decision
Of
on
course,
that.
of course,
Okay.
yes.
So I've seen it a lot in my industry of how much the long-term care insurance world has changed over the years. So what have you seen, from 5, 10, even 15 plus years ago up until now of what's actually changed in this world?
Yes. Some of the policies that I work with go back to the late 90s, early 2000s, because we're finding the people who bought them then are now at the age where they need to make claims, and they're using them. And back in those days, so to speak, the companies were pretty liberal with writing policies. You could get policies, I've seen them with no elimination period.
Okay.
I have seen them with unlimited benefits. High,
nice to have.
It would be great, and absolutely. And I tell people those policies are golden. Don't ever let them lapse.
Sure.
Yes, so you see those very generous terms.
Yeah. So I'm assuming that happened because, again, back then, we really weren't having a huge discussion around quote-unquote long-term care. We didn't have people living, I guess, to the age that we have today. We didn't have the medical advances that we had today. So I'm assuming that's a facet of the insurance companies just didn't think it was much of a risk to sell these policies. And now that we see people living so long and staying healthy for so long, not just living for so long, but staying healthy, they're obviously seeing it as a risk now.
Yes. And they did do estimates back then of how many people would, collect benefits, how long they would collect benefits.
Right.
Unfortunately, they were not accurate.
Yes.
And people use these policies much more than they thought that they would.
Right. So some of these policies that were bought, like you said, back in the 90s or early 2000s, I know I've seen it with a few of my clients that the insurance company can actually raise premiums on certain policies. And again, this probably goes back to reading the policy and seeing if that can be done on the policy that you buy. But have you seen that affect a lot of people with those? Okay.
That is when my phone starts ringing and people have a lot of stress, because that was the solution to the issue for these insurance companies. They said some of them got out of the business, some of them actually went through receivership, and across the board there have been these premium increases.
Right.
And what they do is they offer people options. And they say, well, you can keep all your policy terms the way they are, and pay the new premium, and sometimes these are substantial increases.
Sure.
Or you can change your terms, which you can actually do at any time. If you call them up, they'll offer you this option.
Okay.
But what they do with the premium increases, they say, well, you can increase your elimination period, the amount of time you need to wait to get benefits.
Right.
We can, we can cap your daily max. We can, you can decrease the number of years. You can.
So they can fool around with all the bells and whistles.
Absolutely, absolutely, yes.
So then, what do you usually recommend for somebody who comes in and says, "Okay, Jackie, I got my bill this year, and they're increasing my premium, and I want this care, I need this care, but I don't know if I can necessarily pay this premium." What kind of steps do you usually go through with them to talk about that?
Well, I sit down with them, I read through the policy, I look at the terms being offered, I look at their medical history, I look at family history, especially if there's a history of, say, Alzheimer's or something where there's going to be a long-term care need. I look at their financial situation, and we sort of evaluate that in terms of the options being offered.
Okay.
And try to keep it so that they don't have to wait too long for benefits in terms of that elimination period. Make sure their benefits are adequate. I will say I do tend to shy away from changing the inflation adjustment because of the spiraling cost of long-term care. It's expensive and it goes up every year. So I tend to make sure that they have that inflation protection.
Right.
Yeah, so it keeps
the
pace.
inflation protection on most policies, so that's just a cost of living increase on the benefit.
It'll increase every year. And it
Okay.
depends on the policy. Some of them have an automatic adjustment. Some people had to pay additional for that inflation rider.
Gotcha.
But so it keeps pace, because otherwise it's really going to be
Right, yeah,
obsolete.
absolutely. So the costs have been going up so much. So if you touch that, you can possibly not have enough benefit to cover the cost when you actually need it.
Exactly, yes.
Gosh, so there's definitely a lot to think about. Based on your experience with these policies, what type of situations do you see when your clientele is about to go on claim, or when they actually need to kick in the benefits?
Well, I will say there are two trends that we see at Surrey. One is, and this is a general trend with long-term care, people wait too long to get help.
Okay.
Even if it's a few hours of home care, that could prevent them from, say, falling. Maybe they're doing things around the house they shouldn't be doing, and then they fall. They're in the hospital, rehab, they have a long-term care stay. If you get the help up front, it can prevent some of those accidents from happening. With the long-term care policies, I find that people wait too long to make a claim.
Okay.
They either feel that they're not going to qualify, or the claims process is onerous, they're a little intimidated by it. Those are the trends overall that I see. Now, I've seen some specific experiences too.
Let's talk about the claims process. So like we said about going on claims. So what does the actual claims process look like? So when should somebody generally, again, I know everybody's going to be a little bit different, but when should somebody, you say they wait too long, when should they think about going on claim? And then when they do, what does that process look like kind of step by step?
They should think about it when they're having care come in, whether they're moving or they're having care come in, when they start to need help with their activities of daily living.
Okay.
And this is one of the policy terms, is how they define your being eligible for benefits is if you need help with generally 2 activities of daily living.
Okay.
Activities of daily living are bathing, dressing, eating, continence, toileting, and transferring.
Okay.
Transfers is moving bed to chair, chair to table, whatever. But yes, moving around.
Okay.
So you need to require assistance, and it's usually defined as hands-on assistance with those aspects.
With at least 2 of them.
2,
Okay.
generally.
Okay. So when something is around that ballpark of needing assistance in those 2 areas, that's when they should think about starting to go on claim.
Yes.
Okay.
Yes.
And then
and read the policy too.
Sure.
Because sometimes policies will pay for other things too. We have some that will pay for home modifications. Things like that.
Wheelchair ramps and
yes,
stair lifts
exactly,
and things like that.
Exactly.
Okay.
Yes.
Yeah, that's very important to know about in there.
Mm-hmm.
Okay, so let's take it from there. So let's say we are having problems with 2 of those activities of daily living, and we're ready to go on claim. So I'm assuming we contact the insurance company and then go
Yes.
from there. So how do you see that working, and do you help people with that?
I do. I
Okay.
absolutely help with the claims process.
Okay.
The first step is to reach out to the insurance company and file a claim. They send paperwork. The paperwork all needs to be filled out. The medical professionals, they contact your medical professionals as well. And this comes at a time when people, have physical or cognitive impairments, and it's a little harder to do this whole process.
Sure.
I think the companies try to streamline as much as they can, but it's a little bit onerous for people at a difficult time in their lives.
Absolutely.
So the next step after the paperwork's done, the company will reach out to your medical professionals and get verification of your diagnoses and so forth. And then they send a nurse out to do an assessment in your home. And they come out and they will interview you. They'll have you demonstrate how you do things so they can see how much help you need.
Okay.
I always attend those with people because sometimes an accurate picture isn't given. I think many of our seniors like to put their best foot forward.
Absolutely. Absolutely. I think anybody would, yeah.
They dress nicely and they're all
course.
set. I'm like, no, you need help getting dressed, don't you?
Right, yeah.
Maybe you should still be in your pajamas.
The nurse didn't see that it took you an hour and a half to do that, right.
Exactly. And I have people with cognitive issues.
Right.
They'll say, oh, I am fit as a fiddle. But no, they need some help, and the nurse needs to know exactly what's going on in the house.
Okay.
So she can screen them and make a determination.
Absolutely. So once the nurse goes in, and again, we'll assume that all went well. The nurse verifies we need at least 2 of the activities of daily living completed. I'm assuming the nurse then reports back.
Yes.
And then we go from there, and again, depending on what the policy says, the policy starts to kick in. Is that correct? So
yes.
Okay.
Yes.
So we go to that
Usually
elimination period, and then go from there.
They'll usually start it when you file the claim.
Right.
So they can start counting days from there. I have had situations where people have waited to file a claim, but they have been getting assistance and were able to go back a little bit prior to their calling to get the claim approved. I mean, I have had people where we go back a year. If the medical professionals are on board and say, yes, they needed help at that point, and they are actually getting help and paying for it, then we have found that we've been able to document that and get that waiting period satisfied quickly.
Okay. Lastly, before we wrap up, I want to ask one more question about the specific types of policies, because I know from my clients and the ones that I've seen that there's different types of policies out there. Ones that were written, like you said, back in the 90s and 2000s differ a lot from the way they were written today.
Yes.
So what trends do you see on how the policies are actually being created and written by the insurance companies today? So what are people's options on what they look like?
Well, there's still the traditional policies out there.
Okay.
There are a lot less companies writing them. And it used to be 100 companies, and now there are less than 15 companies.
Okay.
There are also policies where husband and wife or spouses can share benefits. I've had a number of those.
Okay.
And what's becoming more popular, which you're probably seeing quite a bit of, is the policies that have a life insurance component to them.
Yeah. Or hybrid policies.
Exactly.
Right.
Exactly. Because in the past, one of the disadvantages of this insurance, as with any insurance, you either use it or you lose it. You could pay premiums for years and never collect anything. You know, I've seen that happen. I've seen people collect a lot of money from them too.
So I explain it to a lot of my clients is like homeowners insurance. If your house doesn't burn down, they're not going to come back and say, thank you for not burning down the house. Here's money back.
Exactly.
You know, you've paid your premiums and you've ensured that didn't happen. And if nothing happens, then so be it. So yeah, the traditional policies work in that same way.
Yes, yes. Now the hybrid policies have a life insurance component, as I mentioned, and if you don't use your benefits or all of your benefits, then there is a death benefit when you pass that can be paid out.
Gotcha. So if you don't need
you do
long-term care benefits or you use a smaller amount, there's going to be a leftover pool of money that will go to beneficiaries or whoever you name on the policy.
Yes, yes. And people
great.
seem to like those policies
Yeah,
because they know they will get some money out of the policy ultimately.
Absolutely. There seems to be a little bit more flexibility there. I think, you know, the big takeaway here is to, one, we have to plan and actually look at what the need
Planning
is.
is important.
And two, look at the different options because there's a lot out there.
Yes.
So we want to make sure that we are picking the right option for the right situation.
Absolutely.
Jackie, if people want to get in touch with you, how can they reach out through Surrey or directly to you to ask you questions on this?
They can contact me directly at Surrey Services for Seniors. We're over in Devon. And my phone number is 610-283-7085, or send an email to Jake Sisson, it's JKSISSON at surreyservices.org.
Well, again, I want to thank you for your time today. You're obviously a wealth of knowledge in this area, and we appreciate you coming on and sharing some of that knowledge with us. And again, if people have extra questions or want to go over something, I hope they do reach out to you.
Well, thank you very much. Thanks for having me, Jake. It's a pleasure.
Thank you. And again, my name is Jake Szulinski, and this is Investing Sense. And please join us next time when we talk about estate planning. Thank you for joining us today.